Welcome, everybody, to another eye opener. This Market Wealth Daily's quick little video chats that we do with some of the top traders in our industry. We've got Blane Markham here on the Hughes Trading Team. Blane, great to have you. Hope you had a great weekend. And what are you looking at in the market this morning?
Yeah, absolutely. Well, thanks first off, just for having me here today, John. Again, glad to be back. Always love joining the eye opener sessions here, and glad to come here and be able to share kind of what I'm seeing in the markets out there. And as you said, I did have a good weekend, so same to you. Hope you had a nice weekend as well. But yeah, definitely some interesting things happening this week. Kind of thus far today on Monday, pretty flat market. Really not a lot happening in trading thus far, but definitely some anticipating some movement, perhaps even later today. We were just off air. You and I were just talking. There's a big trade meeting between the U.S. and China, between our two countries. Trade officials going on right now. That's happening right now as we're speaking. So fully anticipating probably some type of headlines. Obviously, impossible to predict what's going to come out of that meeting, whether good or bad. But I'm sure a lot of folks around Wall Street have their fingers crossed, hoping for some additional clarity, some possible explicit details of what is being ironed out, maybe some framework that they're working towards, but hoping for some good positive details there to maybe provide some further support for stocks. But it's kind of having that on the radar. But I anticipate, John, that's probably why the markets have been flat today. But just that amongst a few other things I wanted to touch on today. So.
Yeah, that completely tracks. I know that that's a big component of this stuff, especially this market. And I do feel though like we've kind of coiled up in this sideways market a little bit, and you know, uh, Wall Street doesn't like having money sit still. They like moving it around one way or another. And if we do get a big headline, I think that we might see some really interesting response from the market on this stuff.
Yep, absolutely. Yeah. So if, in the next, coming hours here, could even happen while we're on air right here. I mean, we're not watching right now, so it could be happening. But if you start seeing markets moving out of nowhere, there's probably some headline breaking somewhere, about those meetings. So just, be on the watch out for that today, folks. But I'm going to go ahead and hop into a couple things I did want to share with you all today. And the first one I was actually going to touch on, um, actually a trade that I had highlighted last week. I believe it was in Wednesday's call last week. John, correct me if I'm wrong. But
Yep.
it was for CrowdStrike. I had touched on this stock right here. I was talking about how there's a lot of tailwinds behind this stock. They're one of the preeminent players in their industry, and they had a crazy run up into earnings. They reported earnings last week. They had rallied quite substantially into that report. That always, I feel a little uneasy when I have that set up for a stock, rallying quite significantly, hitting new all-time highs, leading into an earnings report. That's telling me that, the company had better deliver a perfect report, or else, the stock's going to get hit after those numbers come out. And, that's what we saw. Had a bit of a pullback, but it was far from breaking the trend in CrowdStrike stock. So I had said that, that was a really attractive entry point that on that Wednesday following that report. So this was the day that we talked about that CrowdStrike trade right here, John, this red bar right here. That was the post earnings drop. You can see the stock's recovered quite well since then. It's rallied about 10 points or so at current prices based on the between now and the closing price from that day. And if you remember, I actually had recommended a call option debit spread on that day. It was the July 18th, 430, 440 strike call. And so you can see, of course, that was an in the money call spread at the time I pointed it out. And you can see those options currently are still well in the money now. So just a brief recap on that trade, kind of circling back to see how that's performing. It's still nicely in the money. Actually, I looked at the current value of that trade. It still is trading at a very attractive entry point level. So it's actually, still a nice setup for anybody who is, could be potentially looking for a call option spread. It's still trading at a very nice price, offering a great profit potential. But, that trade is still sufficiently in the money and set up, at least at current prices, to be well on track to realize its full profit potential as it nears its option expiration date in July. So that trade's been working out quite well so far.
Awesome. Yeah, no, it's been fun watching it. I know when you mentioned it last week, I'm like, man, that's great. What a great way to take advantage of this market. So good to know that there's still opportunity for people who maybe didn't see it last week and want to jump in.
Yep, absolutely. So glad to see, when we spotted some opportunity last week, glad to see that working out and kind of chugging on along right here. But with that, folks, I want to go ahead and hop into just a brief, just kind of commentary of the market, just looking, from the index level down. Always like to do this every time I hop on. I think it's really important just to, be mindful and be cognizant of, what the index is doing, so you can see just broadly how stocks are performing. And so right here, I just have a chart pulled up. This is looking at the past year of trading for the S&P 500, and this is the headline S&P 500 index. We're going to talk about a little bit nuance with this here in a second, but right here, this is just the main S&P 500 index. And you can see at current prices, we're pretty much unchanged from Friday's close. We're still hovering right around, we're basically right at 6,000. And I touched on last week a couple times. I was saying, this market really appears to be set up for some range bound kind of consolidation trading, particularly after the just rip roaring rally that we saw coming off those April lows. I mean, we've put together, I mean, gosh, it's probably got to be a 25-26% return at current levels off of that early April intraday low. And, after you see a stretch, in the market like that in such a short period of time, really in just about, 1.5 to 2 months time, you fully would anticipate some of this, kind of a slowdown in momentum, a little bit of digestion, some consolidation in stocks and, shareholder bases, just, because inevitably you're going to see some risk coming off the table. Some people, you know, locking in those profits, but also, that doesn't mean that stocks have to go right back down and retest those lows or anything like that. It just means they're, probably going to be stuck kind of trading sideways for a bit. And I think we're still seeing that. We traded up to the 6,000 level last week. I mean, there was a brief period where it kind of floated right above that, but we closed at exactly 6,000 on the S&P on Friday. And you can see we're trading right at exactly that point today. We're 6,005. So we're, call it 6,000 on the S&P. And, I think we're still going to be stuck. I think as I mentioned last week, I thought that the ceiling was somewhere between 5,950 and 6,000. I think we can safely say that the ceiling on this range is probably right around 6,000. And then the floor would be, again, that rising 200-day moving average. And, really for the past almost month at this point, that's what we've been trading around in. We, finally broke above the 200-day moving average. About 2 weeks later, we traded down, had a very successful retest, traded all the way down almost to the penny from it, and rallied and bounced. And we've gone on to continue making new higher highs and higher lows over the short term from there. So, still, just looking at the market, still very constructive trend. Really like to see what I'm seeing in the technicals, but still fully anticipating, that range bound consolidation trade, probably at least, maybe throughout this month before, ultimately getting some catalyst probably throughout the summer to go ahead and push stocks on higher because, as things currently stand, we're less than a 3% move higher. It's really, I think, actually less than 2.5% required to the upside for the S&P to break out to new all-time highs. So, that depending on what happened, if we could get a, out of nowhere, a really, really positive trade deal, it could be any number of different things that the market would really like to see. We could easily find ourselves sitting at new all-time highs on the S&P 500. So it doesn't take that much more to get there, but I anticipate we're probably not going to have a straight line run off of those April lows all the way to new all-time highs. So I think there's probably due for a little bit of digestion here just in the weeks to come before ultimately achieving that goal here in the next few months. So
Yeah, that sounds right on point. Completely tracks, and the what we have to do then is be ready for that type of market condition and prepare ourselves with the type of trades that will thrive in that situation. Kind of like the trade that you mentioned last week that we just followed up on, and just interested if you've got more that you probably have spotted. I'm going to guess you have, and which ones you're looking at.
yeah, absolutely. So, with all that in mind, anticipating that's at least most likely that's the market environment we're walking into right now. One thing, the next thing I want to point out here is this chart, and I'll kind of explain what's going on here. So, as I mentioned just recently, we had the S&P 500, great run. But what this chart is right here, this is another ratio chart. So I kind of started introducing these last week. But what this one is actually looking at, this is looking at the headline S&P 500 index divided by the S&P 500 equal weight index. So what you're looking at here is you're trying to figure out the relative performance between just the typical S&P 500 compared to its equal weighted counterpart. So it's the same S&P 500 stocks, but instead of being market cap weighted and weighted differently as the S&P 500 is, the equal weight, of course, all 500 stocks in there are all equally weighted. So why you would look at a chart like this is you're trying to figure out where is the strength in the market? Is it is it market wide? Is the equal weight outperforming the S&P 500 because just essentially there's a huge pocket of strength across the market, virtually every stock, it's really an everything rally, all stocks are rallying. In those type of markets, you're going to see the equal weight start outperforming the S&P 500. On conversely, when it's still decent breadth like we're seeing right now, but not just significant bullish activity across the board, you're going to see more pockets of strength. So right now we're seeing a lot of strength in technology. We're seeing a lot of strength in financials and industrials. So, we're seeing it more kind of sector based, but, still have a lot of sectors that are performing well, but it's not all sectors. So that's what we're seeing in this chart right here. So since our numerator in this ratio is going to be the S&P 500 index and our denominator is the equally weighted S&P 500, what this chart's going to tell us is when this line starts sloping up, ignore all these numbers on the side. Those are not really relevant for what we're looking at. But when you see the line for this specific ratio start sloping up, which you can see it's been doing really since early May, you can see it, it had been in kind of a sideways, just stuck trading exactly sideways through March through the end of April. But come early May, you see that line start to have a bit of a slope up. It starts slanting upwards. So what that means is that our numerator, the S&P 500 main index, is starting to outperform the S&P 500 equally weighted index. So what that is telling us, as I kind of just walk through, that means at least some of those most heavily weighted portions of the S&P 500 index, they're gaining momentum. They're starting to outperform, the rest of the index. And so that equally weighted index is underperforming. That means, the broader, the lesser important portions of the index are, really underperforming. Whereas those most important, most heavily cap weighted components of S&P, they're really the ones where the true strength is in the market right now. So as I just said, technology, financials, industrials, that's where we're seeing some of the absolute best strength across the market. So we're seeing that in this chart right here, that headline S&P 500 index, it's rallying much stronger relative to the equally weighted index. So with that, keeping that in mind, we know where the relative strength is then. And so because of that, that's why we're looking to target certain trade opportunities in the strongest sectors in the market right now. So right here, this is actually just the technology select sector spider ETF. This is the XLK, very well-known ETF. You're probably familiar with it. But so this is just tracking the performance of the tech sector broadly. Of course, it's not equally weighted. This is the market cap weighted tech ETF, and it's particularly has very heavily weighted in NVIDIA, Microsoft, Apple. Those are the top three holdings. But you can see this tech ETF XLK. It is it's dollars away from setting a new all-time high. We're still a couple percent away on the S&P 500 index from setting a new all-time high. But you can see right here we had almost really like a triple top between late last year and earlier this year on the XLK ETF. It was just a touch below 242.5. It really struggled to crack that level. It was unable to close above it. But you can see at current price levels, it's marching right towards that. So there's a great deal of relative strength in the tech sector right now. Now, keeping that in mind, it has run very far, very quickly. According to several technicals on this chart here, John, it does look like the tech sector's a little overbought in the short term. So definitely being mindful of that, not maybe looking to go ahead and push all of our chips in the middle of the table right this instant. But this is definitely a spot that we're looking, to find further opportunities as they present themselves, as they become, no longer overbought, start trading at more attractive price levels. But so, when we see the XLK drop back down below this upper Keltner channel here, that would be a signal to us. Also looking at this RSI chart down here below, you can see that XLK's current RSI is above 82. That's generally speaking, historically, you are often not rewarded hopping into a trade when its RSI is trading at 82, it's usually a little bit better to wait for that RSI to come in, pull back a little bit, get down, below 70, somewhere between 50 and 70, let that super hot equity cool off for just a second. And you wait for a better opportunity in the midst of a very strong bullish run. Wait for a little bit better opportunity after a slight pullback to go ahead and hop in and start finding some opportunities in that sector.
Yeah, so if I've got this right, both the ratio chart and then by pulling out the tech sector, these are kind of leading indicators in a way, right? So they're going to be the ones that are going to pull the momentum in the direction that they're going. So if you can look at these, it'll give you a little bit of an idea of what to expect. It's no guarantees on anything, but the likelihood of the market following those type of indicators is pretty real, and it allows you then to kind of stack the odds in your favor a little bit then when you're finding a more specific trade. Is that right?
Exactly. Yeah. Hit the nail on the head there, John. That's exactly right. We're by looking at these types of technicals here, these types of specific charts, particularly the ratio chart, as you said, they are pretty much a leading technical, signal here, because you can very early see when something starts to outperform relative to its counterpart. So in this case, we could see the headline S&P is outperforming compared to the equally weighted S&P. So that's telling us that there's something in that S&P 500 market cap weighted index, that some of those more important sectors like technology, like the financials, some of those more heavily weighted names in there, they have to be outperforming for to see that stark of an outperformance, over a month, 2 months time compared to the equally weighted index. So that's telling us there's some true pockets of strength in there, and it's still, pretty early on because it's only been happening for, about a month's time. And so, with that, we can punch down to find where those significantly strong sectors are. And, this is exactly what you'll find right now. It's going to be in tech, in financials, and industrials. That's what's really driving the market, has a ton of momentum behind it right now. And, as you said, Wall Street, it's kind of circle back, bring things full circle. Wall Street doesn't like to have money sitting idle. They like to be chasing what's moving. They like to be trading. They're active. They're in the markets every single day, every single minute. And when they see something moving like these, this is where a lot of that attention is going to go. They're going to be trading what's moving, and this is where the action is right now. It's in these three main sectors, and of those, this is probably our favorite one because it has, at least currently, the most momentum and probably the best technical setup, and looks like it's most poised to break out to new all-time highs.
Yeah. Just amazing too. And as you see this money start to kind of figure out where it wants to go, you get this rotation. And, it's interesting to watch which sectors are kind of picking up and others are letting go. Instead of everything going up or everything going down, it just kind of moves from one to the other. And it might, on the surface, look like things are pretty flat. And, today, of course, the volume's down, like we said. But a sideways market, what you can get a lot of times is it looks like nothing's happening, but behind the scenes, everything's moving and churning and kind of coming out of tech and going into financials, or vice versa. It might just be rolling through. So these are great tools to help look at that as well and kind of get on the leading edge of those rotations so that you capitalize on it.
Yep, 100%. So, with that in mind, John said this is just one area that, Chuck and our team here, we're going to be watching the tech sector very closely. Again, probably looking for a little bit more attractive entry point, because things have gotten a little frothy at this point, but that's okay.
Mhm.
Just speaking specifically in the short term. So probably wait for things to just cool down just for a day or two, get back into more of a desirable range for trade entry. But that's what we're keeping our eyes on right now. And just
Awesome.
event wise, we do have a couple things coming up. Kind of as we touched on at the beginning of today's call, there's a big meeting right now going on that's probably going to move markets later in the day. A big trade meeting between the
Mhm.
U.S. and China. So certainly going to be in tune, looking for updates there. But a couple things kind of backloaded in this week. We have two inflation reports, so everybody keep your eyes out for the results from those. We did see a bit of a ramp back up in Treasury yields last week, and that had been kind of a headwind to stocks as those rose up. So pending the results of those inflation reports. That certainly could move treasury markets, move those long dated treasury yields. And, that could be something that keeps stocks, in that range that we talked about earlier, should treasury yields continue moving higher. On the back of possibly some data from those, so just something to be aware of. Later in the
Yeah.
week, it's kind of backloaded, so that's what we're watching this
Yeah.
week.
And also, speaking of big events, I know Tuesday, which is, right now it's tomorrow. I'm not sure when everyone's going to be able to catch up on this video, but you guys have a big event that you're doing. You and Chuck are going to be kind of jumping into the room with the guys from FFR, and really excited to see that presentation. So, we'll put a link in the email. So if anybody wants to sign up for that, I think it's a can't miss kind of event. You guys, from what I heard, the stuff that you were going to go through in there is pretty, pretty new, cutting edge stuff, right?
Yeah, absolutely. We're going to be as you said, we're going to be talking with some of our partners over at FFR Trading, and sitting down, kind of having a little fireside chat, talking about just some of the hottest, not sectors, but really the hottest industries, some of the places that have the absolute most buzz out there in the market right now. And we're going to be focusing on the quantum computing sector. And that really kind of dovetails right in with the AI revolution we're seeing right now. The quantum is a little bit further down the road, but some of the stocks, some of the companies that are, going to be heavily involved in the quantum computing revolution that's to come, those share prices are not waiting for those earnings to start pouring in. Those stocks are moving, and one of our absolute favorites that we're going to highlight and talk through extensively in tomorrow's presentation. I saw just this morning the stock is roaring higher. I think it was
Wow.
up somewhere near between 8 to 10% just today. It's a
Wow.
fantastic ticker. It's been looking really well. In fact, we actually put out a great trade recommendation for it recently in one of Chuck's premium tier trading services. So we definitely have our eye on what kind of is the bleeding edge of technology out there, and we'll be kind of touching on some of that tomorrow. So we'd love to have folks go ahead and sign up to attend. Should be a great session tomorrow.
Yeah, that definitely, that's it. And that kind of the services are amazing for making sure that you don't miss those great trades. Either, it's always great to have somebody kind of find that stuff for you, even for the traders who are, kind of a little bit advanced. It's great having another source of these great setups and trades. So this is a great event. I'm sure it's going to be packed full of people. So make sure you sign up soon. We'll definitely put the link in the email.
Yep, absolutely. We'd love to see folks sign up, and I know myself and Chuck, we'd love to certainly have you there in attendance for tomorrow. So, but with that, John, that's really all about that I had for today. So, we
Yeah,
probably can go ahead and sign off and wait to see folks back here on Wednesday.
absolutely. Well, thanks again for the time, Blaine. Appreciate it. Appreciate all the insight, and we'll talk to you soon.
Awesome. Yeah, thanks so much, John. Appreciate you having me, and like I said, looking forward to being back here on Wednesday. So, fingers crossed for a fun week in the markets. Hopefully, some nice more green days.
There you go. All right. Take care.
All right, take care.